Hi, my name is James O'Daniel, and welcome to my EDP 648 Capstone project, Mutual Fund Basics. Mutual Fund Basics is a course designed to provide an overview of the types of mutual funds offered by our clients to their shareholders. It is intended for associates in our contact center and operation groups. Goals. At the end of this course, you should be able to describe the different types of mutual funds our clients offer, explain asset allocation models, and analyze the risks associated with each mutual fund type. Before we get started, let's check your knowledge with a quick pretest. The pretest is offered on the pretest section of the Mutual Fund Basics Google site. All right, now let's get started with the course. What is a mutual fund? A mutual fund is a professionally managed investment of pooled money that is used to buy stocks, bonds, money market instruments, and other investments. Next, let's discuss the common types of mutual funds offered by our clients to their shareholders. The most common types of mutual funds offered by our clients are stock funds, bond funds, money market funds, blended funds, and sector-specific funds. Stock funds are sometimes also known as equity funds. They invest in stocks of U.S. or foreign publicly traded companies, and they're categorized by the size of the companies they invest in and their investment strategy. Company size is sometimes referred to as market cap. A small cap fund invests in small companies, a mid cap fund invests in mid-sized companies, and large cap funds invest in large companies. Investment strategies employed by mutual funds would be growth, focusing on companies that have growth potential, income, focusing on companies that provide income streams through dividend payments, growth and income, a combination of companies with growth potential and those that provide income streams. Aggressive growth, focusing on small companies with growth potential. Value, focusing on companies that the fund manager feels are undervalued in the market. And international, which focuses on companies that are outside of the United States. All right, let's test your knowledge. Name and describe at least 3 types of stock funds. Next, let's discuss bond funds. Bond funds are also known as income funds. They invest in debt issued by a corporation or the government. They're categorized by the average maturity or duration of the bonds held in the fund and their quality or credit worthiness. Maturity or duration is the amount of time the bond issuer has to repay the bondholder. A short-term bond is 1 to 3 years, an intermediate-term bond is 3 to 10 years, and a long-term bond is 10 years or more. Quality or credit worthiness is based on the expected ability of the issuer to repay the bond. Government bonds are issued by the government or its agencies, and these are considered the highest credit worthiness. Investment grade bonds are corporate bonds with a lower potential of default. And then high yield are sometimes referred to as junk bonds or corporate bonds with a higher potential of default. None of our clients offer any high yield bonds. They all fall within the government and investment grade categories. All right, let's test your knowledge on bond funds. Name and describe at least 3 types of bond funds. Next, we'll discuss money market funds. Money market funds are also known as cash. They're basically short-term investments that keep its dollar per dollar value. And let's test your knowledge. Can you describe a money market fund? Right. Next, we'll discuss blended funds. Blended funds are mutual funds that invest in a combination of both stocks and bonds. They're categorized by the target mix allocated between those stocks and bond portions. The most common types of blended funds are balanced funds, which strive for a 60-40 split between stocks and bonds, an aggressive blended fund, which strives for a higher percentage invested in stocks and bonds, and then a conservative blended fund, which strives for a higher percentage invested in bonds than stocks. All right, testing our knowledge on blended funds, can you name the 3 blended fund types discussed? And lastly would be sector funds. Sector funds invest only in one particular industry or sector. An example of that would be a fund that invests in only technology or healthcare, pharmaceuticals, or energy. And to test your knowledge on sector funds, provide an example of a sector fund. Right, next, let's discuss risks of mutual funds. All investments carry a level of risk, and mutual funds are no exception. In this section, we'll go over the general risks involved with each of the mutual fund types we've discussed. And then keep in mind that one risk that impacts all funds is market risk. Market risk is how the volatility of the markets impacts the value of the fund's underlying holdings. This in turn affects the share price of the fund. And then ranking the funds from highest risk to lowest risk, you'll see that sector funds are the riskiest, with then stock funds, blended funds, and bond funds following, and the money market fund is the lowest risk of investment types that are offered by our clients. Sector funds are considered the riskiest investment due to its non-diversification in holdings and its focus in one specific industry. Let's test your knowledge. Explain why sector funds are considered high-risk investments. Stock funds. Stock mutual funds are the second riskiest type of investment. Risk is generally determined by the size of the company being invested in, also known as its market cap. Risk and company size. As you can see, mutual funds that invest in smaller companies or small cap have the most risk. Those that invest in mid cap or mid-sized companies have moderate risk. And then those mutual funds that invest in large cap or large companies have the lowest amount of risk. One exception to this rule are international stock funds. International stock funds are considered the riskiest of stock funds due to additional risks, such as currency risk and geopolitical risk. Here's a bar graph summarizing the risk of stock funds, with the international fund being the riskiest, and then large caps having the lowest amount of risk of stock fund types. All right, let's test your knowledge. Explain how stock fund risk is determined. Now let's discuss blended funds. Blended funds are considered medium risk. They're made up of both stocks and bonds, as previously discussed, and it's the percentage of the fund's investment in stocks that determines its overall risk. The higher the stock component of the fund and the less amount of bonds, the more risk the fund is said to have. Conversely, the lower the amount of stocks in the fund and the more bonds the fund has, the less amount of risk the fund has. All right, and to test your knowledge on the risks with blended funds, can you explain what determines blended fund risk? Next, we'll discuss bond funds. Bond funds are considered the second most conservative investment. The two main types of risks associated with bond funds that our clients offer would be, one, interest rate risk. When rates go up and bond prices go down, and then when rates go down, bond prices go up. Two would be credit risk, and that again is just the creditworthiness of the bond issuer and the risk of default if the issuer is unable to repay bonds. In the previous category or section, we discussed that none of our clients offer default or high yield risky bonds. They all fall within credited or government issued bonds. All right, let's test your knowledge. Explain what determines bond fund risk. And the last part of risk would be money markets. And money markets are considered the safest type of investment, and they maintain a dollar per dollar share value. They invest in low risk short term debt, and it's essentially holding your position or your money within the fund as cash. And to test your knowledge on the risks of money markets, explain why a money market is considered low risk. In this next section, we'll discuss asset allocation models. Asset allocation models are used to diversify investments among the different mutual fund types. And what this diversification allows you to do is it helps you control risk. There are three main models of asset allocation. It's growth, balanced, and income. In the growth model, you'll have 70% to 100% invested in stock funds and 0 to 30% invested in bond funds. The growth model is considered a higher risk type of model to use. The balanced model will have 40 to 60% invested in stocks and then 40 to 60% invested in bond funds. This asset allocation model is considered of medium risk. And the last model would be the income model. In this model, 70 to 100% would be invested in bond funds, with 0 to 30% invested in stock funds. And this asset allocation model is considered the lowest risk model that an investor could use. Regarding asset allocation models, investors can use variations of each model based on their age and risk tolerance. The general consensus is that the younger an investor is, the more they can afford to be aggressive because they have more time to ride out the ups and downs of the market. Whereas an older investor should be more conservative because that time frame for them would be a little bit more limited in regards to when they may need to use the money that they've invested. Right, now let's test your knowledge on asset allocation models. Can you name the three asset allocation models or the primary asset allocation models that were discussed? Conclusion. Now we've come to the end of the course, and you should be able to describe the different types of mutual funds that our clients offer, explain asset allocation models, and analyze the risks associated with each mutual fund type. Feel free to go back over any portion of the course you feel you may need more information, or if you needed a little bit more time to go over those topics. And then before we finish, let's take a quick post-test to see how well you acquired the knowledge that we discussed on the various topics regarding the mutual funds that are offered by our clients. Feel free to review the entire course or just certain sections you'd like to get more information or just to retouch on things before taking this post-test. And the post-test is located at the post-test tab on the Mutual Fund Basics Google site. And I would like to thank you for taking this course. I hope you found it beneficial and helpful with the basic information for all of our clients in regards to the mutual funds that they offer. Thank you very much and have a fantastic day.